Well, the one company in focus after its earnings is Britannia Industries. The stock on last count is down about 5.25% on Britannia futures. So let's try and understand what really went by in the quarter and what is the outlook going forward. Joining me right now, Varun Berry, the MD at Britannia Industries. Varun, hi, good morning. Good to have you on the show. What's disappointed the street, Varun? I guess, in the first quarter, you stuck your neck out and you said that you'll manage to maintain the sales momentum. You posted a good, solid 26% growth, which didn't quite match up in the quarter. To me, that seems to be the one key reason.
Well, you understand the situation that we are going through. Nobody can forecast what's going to happen tomorrow. But I think we had a great quarter. I personally think, 11% growth in the face of such a situation was fantastic. And similarly, even from a bottom line perspective, we had a really good quarter. See, what happens is that in a situation like this, what we've seen is, if you were to look at the trade structure, it's the big towns versus the rural, and it's the modern trade versus the traditional trade. So if you were to look at it, our traditional trade growths have been solid double digits, right? It's the modern trade, which, August is the month. August and January are the 2 months when you have the big days in modern trade. And this year, the big days have been very, very tepid. Modern trade growths have been very low. The shutdowns, etc., were all in large towns and cities, and hence modern trade suffered. So I think what we look at is how a bulk of our business is doing, and I think the traditional trade has been very solid. Our rural growths have been very solid, which is what really matters in the long run. There have been, obviously modern trade will come back. It's not that modern trade is going to remain tepid as we go forward as well. It will certainly come back, and I think that with the large towns opening up, things should normalize much faster. But yes, you are right. Maybe, a 27% growth in the first quarter and an 11% growth in the second quarter would have, people would have thought, what is this? But I think, in these current circumstances, it's a fantastic number.
Yeah, sure. I was scratching my head when the earnings came out. I was like, what went wrong from the lockdown to now when things are beginning to open up? Are people not stocking up on cookies, not eating cheese? What are the patterns that you're witnessing?
Well, the consumer patterns change every day. I do think that people have started to eat out, snacking outside home, ordering, cooked food, or ordering snacks, hot snacks at home. All that has started off. People have got very bored to sitting at home and just doing nothing. So I think people have started to venture out as well. So things are moving to, I would say, at about 60% or 65% normalcy. I think it'll take a little more time. Obviously, COVID's not going away in a hurry, so it'll take more time. But yes, we will walk towards a normal way of life in the next, 6 to 8 months.
Sure. Varun, I completely understand that the picture is so hazy and things are so fast changing and dynamic. But could you give me a broader parameter of your segmental revenue? And where is it that you see the biscuit sales, the non-biscuit sales, dairy, what have you actually headed in, say, the next 6 months?
We don't give a forecast of sorts, and frankly, even if we would, we wouldn't have been able to. Nobody knows where it's going. But I would say that, pre-COVID conditions we could come to in the next 3 to 6 months. And in that, I think, during these 3 to 6 months, we could, obviously biscuits and other home consumption products like cheese, rusk, etc., would be at an elevated level of growth. while the others would be at a slightly low, level of growth. So that's all we can say at this point in time. But I'm still very positive, despite the fact that the economic parameters are not looking extremely positive. But I do think that food, etc., will be reasonably good and robust as far as growths are concerned.
Sure. Varun, what can you tell me about the competitive landscape and where you see your market share headed?
We haven't had a market share report for some time now because Nielsen was not able to do their field work during this period. But my guess is that we are definitely, at the upper end of the quadrant in terms of growths. Certainly would be, equal to or higher than category growths. Because we've been executing reasonably well. Our execution on the ground has been really good. All of the key performance indicators are looking solid. So our Hindi belt, growths are very solid. Our traditional trade growths are very solid. And some of the focused areas that we've taken for ourselves even our adjacency growths have been very solid. Barring cake, which is dependent a lot on schools and on railways, etc. We've had very solid growths even in the adjacency areas. We've had a very good growth even in our international business. So overall, I think it's been a pretty good quarter for us.
Sure. You mentioned that you're witnessing downtrading of products as well. Now, given that you followed a strategy of introducing premium products and then also launching, small affordable packs as well, what's been your feeler from the ground as to which way the consumer is actually tilting?
So, when I look at downtrading, I'm not looking at downtrading within the category. I'm looking at downtrading in the consumers' set of foods that they eat, right? So I think we are the cheapest snack available in the market, and hence the downtrading is leading the consumer towards our product. Within biscuits, yes, there are some areas where there's downtrading happening. We don't have a big play in the value segment, but we've been seeing a very good movement towards our Britannia Marigold, our Milk Bikis. All of those products are doing extremely well, which are not just good, well priced from a consumer standpoint, but also extremely profitable. So it's the perfect sweet spot as far as we are concerned, and we are seeing good momentum there.
Sure. Varun, what is it that you can tell me about the input cost environment? Because Q2 saw some moderate raw material inflation. What is the outlook for your key raw materials going ahead?
So what we've seen in the second quarter was maybe a 2 to 3% kind of input cost increase on the commodities that we buy. And within that, we saw deflation on flour, which was almost at about a 4% deflation. And obviously a deflation on the milk products that we consume because milk prices have been fairly low. And that deflation was in the around 20% odd. While there was inflation on palm oil, there was a 25% inflation on palm oil and a very moderate 4% inflation on sugar. As we go forward, I think the flour prices will normalize and the deflationary environment on flour will go away. Starting December, once the free wheat, etc., from the PDS system stops, I think there will be a slight inflation there. I'm hoping that the inflationary pressures on palm oil will come down to an extent. So I would see a reasonable range-bound inflation even in the next 6 months or so.
Varun, as I'm looking at your numbers, your debt levels have risen in this second quarter. There was a rise in your short-term borrowings to fund the raw material covers. It seems to be the case. There was further high dividend payout as well and redemption of some of your ICDs, which led to lower end cash levels. What is it that you can tell me about cost-saving efforts going forward and sustainable efficiency gains?
So the debt was to fund some of our raw material purchases. So we do go long when we think that the prices are right from a raw material standpoint. And debt today is again, fairly cheap. So we were borrowing money between 3.5 to 4%, which is a very attractive price to borrow. And that's what we did. And as we move forward, this is the time to wind down because now we'll be using some of the commodities that we bought. So that's where the debt came in. And I think it's not a long-term thing. It's, the dividends, yes, we paid very good dividends. Despite that, we have a fairly good cash position as we stand. And we are generating, almost 150 crores of cash every month. So we are in a good place as far as that is concerned. So that should be making our investors fairly happy.
I'm sure they're all listening to you. What can you tell me about the capacity expansion plans, Varun? Because, the feeling that I get is that things are just so hazy, not just with what the consumer patterns are going to be, but just how life is going to be in this post-COVID times. Given that your capex in the first half FY21 was a little modest at about 1 billion rupees.
Yes. Yeah, so, you've got to remember that we sell almost 1.3 million tons of product every year. So even if our volume growths are, let's say, 7-8%, that's a big tonnage. And that requires us to invest in CapEx to get those capacities going. So what we've done as of now is finalized 3 new facilities that we'll be putting up. One is in Tamil Nadu, in Tirunelveli, and this is the first time we are getting an incentive from the Tamil Nadu government. And it's, as you know, it's our biggest state. So we are very excited about that investment. The second is in UP, which is turning out to be a very large state for us as well. Despite the fact that we have still have a low share there, it's turning out to be our 3rd largest state today. And we've got no, capacity of our own there. So we are putting up a facility there, and we've got, the government giving us incentives there as well. And these are very attractive incentives which are going to last us for another 10 years or so. So that's the second facility. And the third one is going to be in Bihar, which is a very strong state and a large state for us. So that's in order of priority. And in the next 2 years, we'll be putting up all of these 3 facilities.
Sure. Within your product mix, Varun, where do you see visibility of a higher trend? And given the geographical trends, would you say that rural will continue to dominate the urban trend right now?
I would think so. I think, there are 2 factors to this. One is obviously the rural economy seems to be buoyant. We've had 2 good years of monsoon and, the Manrega, etc. All that seems to be working. And there was some reverse migration from large cities to rural areas. So that's one factor which is leading to some kind of buoyancy as far as rural is concerned. But more than that, you've got to, as a company, till about 7-8 years ago, were a fairly urban-centric company. And our shares, even today, in rural areas are lower than what they are in urban. So we have an opportunity of gaining share in rural areas. So putting those two together, I think for us, rural is going to be a very, very important play.
Varun, it's a lot leaner and fitter you since we last saw you on TV. Are you off cookies, off dairy?
Well, I've been exercising very regularly. And yes, I'm not off cookies, I'm not off dairy, but I've been exercising very regularly.
Okay, burning all the carbs down. That's the way to go. Great speaking with you, Varun, and good luck for the future quarters ahead.
Thank you very much.